What's up, everybody? Welcome into Real Talk Real Estate. I appreciate you being here. If you like that new music, give me a like. I really love that new music. I'm so glad I did it. Love the intro. But yeah, so a lot has happened, and we're going to talk through everything. So before I get into any of that stuff, if you haven't watched my videos on the NAR settlement and what's changing, go watch those videos. I'm going to reference in some in this video, but I'm not going to go in depth. So go watch those videos if you don't know what's changing in real estate, and especially, I cannot talk, specifically here in Arizona. So go check those out if you haven't done it already. Just brief overview, 2 things that changed. Before you can see a house with a buyer's agent, they have to have a buyer broker signed with you. And we can't put the commission in the MLS anymore, so we can't see that. So every time I call somebody, I have to go, hey, are you offering buyer compensation? So it's one of those that go watch those videos. They'll go more in depth about it. But a lot has changed because we've had the stock market kind of crash. We've had a lot of people kind of freak out because we're in a recession, and there's lots of numbers that are being thrown around, all these different things. So we're going to talk through it briefly to go into that. And again, if you have more questions, let me know. I'd be more than happy to sit down, go over all this stuff with you. But where do we always start is how many homes are on the market. So last month, we were just around 17,800, and we're about the same this month, 17,800. Normal is 25,000. That's the normal mark, and we haven't been there for years, probably going on a decade. So it's one of those that, decade's 10 years, right? Yeah, I'm pretty sure it is. Anyway, so it's one of those that we're still not back to normal, but we have seen some changes. So we're going to talk through that. So with inventory not changing, it's still talking about supply and demand. Now, we had been trending down because we had more supply coming on, and a lot of cities actually, I shouldn't say that. We weren't seeing supply coming up. Supply was staying about the same. We were just seeing demand wane a little bit where there's not as many buyers in some cities. The farther out you go in Phoenix, there weren't as many buyers. So where you have like Surprise, Queen Creek, Santan, Buckeye, struggling markets, more of a buyer's market, where a lot of other markets were balanced markets. And so that's where we've seen a little bit of a change, because what we've also seen is interest rates come down. Interest rates dropped down. They were around 7%. Now we're around 6.5%. And that is partially due to some of the economic stuff that happened. We'll talk about that in a second. But the Fed has already said, and it looks like they're banking on lowering rates in September. Now, partially of the rates going down was because the Fed said something like that. But I still think in September, you'll probably see rates go down again. So if that happens, it depends on how much of a point they go down. If they do like a quarter point or a half a point, just depends on how much they go down. We may see interest rates come down lower. So conventional 6.5, FHA, VA, we're sitting around 6.1. So it's one of those that if those keep coming down, you're going to see buyers come back into the market. Now, there's a lot of factors. People are uncertain because obviously we're in an election year. And as I have said for months at this point, they were probably going to lower the rates at the end of the year. I was very bearish on whether they were going to because of how inflation was looking. But then as inflation started coming down, I was like, okay, yeah, they're probably going to do it here at the end of the year. And looks like they're going to do it once, if not twice. So I still want to see inflation be curbed, but they're going to play some politics. It doesn't matter which side you're on. Every 4 years is probably going to happen. So it's one of those that they always want people feeling good. So it is what it is. But I think that's part of it. But the other thing, they're stuck between a rock and a hard place because the market went down. And again, I am not an expert when it comes to the stock market, all those different things. I can bring someone on for that. But when you see the markets dive and you see unemployment rising, I've been talking about this for several months, is unemployment's been rising slowly but surely, and no one was really paying attention. And then people went, uh-oh, because in the graph I'm going to be showing here, you're seeing where last year we were sitting like the 3s for unemployment. And this year we started creeping up, and every month we're going up. So like, we've gone up past several months where now it's 4, 4.1, 4.2, 4.3, and unemployment's rising. Companies are making cuts. Stock market responded. You have lots of people not sure about where we are. We thought it was a soft landing. Now they're like, well, now we're probably in a recession. There's lots of things. So that affected where the Fed said, okay, well, we still need to curb inflation, but we also don't want to have a massive, crash in the markets. So let's start lowering rates, right? And so I still hope inflation keeps coming down. We've seen inflation coming down. So inflation was in the 3s. Now, last month we were at 2.9. So we're continually coming down. So that's good. But remember, it's at 2.9. Doesn't mean that prices are coming down. They're not. They're still rising by 2.9%. So it's one of those that we're not deflating. We're still inflating. So that number still needs to come down. So yeah, that's kind of where we're sitting. So that's dictating a lot of stuff. So I would imagine because of this, where didn't really see this coming totally, of the stock market kind of crashing and different things responding. If they're going to keep lowering interest rates, let's say conventional is around 6%, that means FHA are going to be around 5.5. People may start coming back in the market. And we're starting to see it. I'll show you a graph here in a second that's kind of showing that response. So there was something that came out from the Cromford report today. I check this out every week. They come out with it, kind of showing where the market is. And I'm going to take a look at it here too. And what it's showing is like the green arrows are showing that the market went up. So like where there's more traction, more people in the market, there's more sales. If it's going down, you're seeing it trend downward. So you're saying, well, it's kind of a mixture of red and green. Yeah, you're right. There is a mixture of red and green here. But last week and the week before that, it was all mostly red. So now we're seeing green. So we're seeing people respond in a lot of these markets, not all of them, but a lot of them, where there was a positive response. And probably due to some of that stuff is interest rates. Prices coming down a little bit in those areas, but also interest rates. So we have multiple in a buyer's market. So buyer's market is anything below 90. So you'll see, Goodyear, Surprise, Maricopa, Queen Creek, Buckeye, all buyer's markets. Cave Creek, Tempe, Peoria are in balanced markets. 90 to 110 is a balanced market. Anything above that is sellers. Now, I think anything below 120 is probably 120, 125 is probably a balanced market. So a lot of these cities are probably in balanced markets, but then you still have some like Fountain Hills is still in a seller's market. Chandler, Avondale, still in a seller's market. Scottsdale. So it's one of those that we still have some seller's markets, but we also have some buyer's markets, and then we have a lot in the middle. So listen, this is the time to buy. I'm just gonna be honest. If you're sitting on the fence like, I don't know if we should buy yet, if let's say interest rates come down even farther, and again, I'm not trying to be paranoid or anything, but I'm just being a realist. If interest rates keep coming down, we've seen people in the new bills, once interest rates come down to 5.5%, 6%, people start buying again. So if you're like, well, I want to wait until we get closer to 5%, well, now you might be in more of a bidding war situation. Maybe the market's going to change. And that's where, because we don't have full inventory yet, that could happen. Now, it might not, but it's a possibility that you're not going to be able to negotiate much. You're just going to have to get what you can get and go. Right now, we can still negotiate. In a lot of these cities, we can negotiate a good amount right now. So if you're looking to buy or you're thinking about it, reach out to me. I'd love to talk to you about it because it is an interesting time to think about buying. So all of that data, there's so much with it, with inflation and with unemployment and all these things. There's a lot of things up in the air. And the biggest thing is going to be is, how does this all play out? And for me, right now, it shows, okay, they're already signaling they're lowering their interest rates. All right, so those are going to keep coming down. That means more people are probably going to come in the market because they can afford more. When you bring interest rates down like that, it's going to make people be able to afford more of a house, because when you're at 7% to 6%, that's probably a $300 difference a month, give or take. So it's one of those that if you're thinking about it, reach out to me. I'd love to talk with you about it. But it's one of those that with all of these changes, there's going to be more as we get closer to the end of the year. So I'm going to keep giving updates, keep giving people what's going on. So if you do have questions about it, my information is below. You can reach out to me. I'd love to connect with you. I'd love to talk with you. Guys, you've been talking to Real Talk Real Estate. I'll catch you next time.